And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Happy Friday, everybody. Friday, October the 21st. My name is John Hoagland. Thanks for trusting me with your time as usual. As always, focusing on accurate context, good risk management, and patience. Capital Preservation Friday. No reason to ruin a good week. Usually, I'm going to see if I can make a little money early and call it an early trading day. As far as economic numbers are concerned, virtually nothing. We do have one talking Fed today. Williams is due to speak at 8:10 Central Time this morning. One thing to keep an eye on there, but as far as everything else is concerned, we've got equity futures continuing to feel the pressure of higher rates and the specter of continued economic weakness. Yesterday's earnings by Snapchat, the miss there put kind of social platforms on a little bit of notice, especially as Elon Musk plans to gut Twitter and sees U.S. recession lasting into 2024. Crude prices have steadied overnight as rate hikes seen quelling demand. Earnings today, just a couple of them, Verizon and Amex, nothing due after the close today as it is Friday. We won't see anything new until Monday as far as earnings are concerned. We've got the VIX up a little bit this morning, but still just hanging right around 30 to 30.4 last I checked. We got the dollar index off its recent lows now, heading back to the upside at 113.83 last I checked. And the yield on the 10-year reaching 4.3% as rates continue to leak to the upside. As always, if you like what you're seeing here, make sure you hit the lucky like button. Share, comment, question, feedback. Heckling and love are always welcome here on the forecast. It is Friday. That this will be the only broadcast we'll be doing here on Friday. We take a little bit easy on you on Fridays. And I look forward to seeing what we see in these markets today. I think we've got some decent opportunities, some potential for markets to kind of get into value area special situation plays. We'll talk about that shortly. In a couple of markets, maybe primed for a little bit of profit taking. We're going to see that as well. This morning, we have Scott saw and he conquered. First in the room, Scott, you win the prize. My brother Rick with us early this morning. Love you. Sonny, Theo. It's good to see you, Theo. Tachyon, JD Royalty. It's good to see you. Scott Shaw Cunningham. Dan Trader, Dimitar, Jules, Brody, Caprice, Ron Merlot. You stay classy. We have the Rooster, Joel, Sarah Hall, good morning, prayers, love, and dancing today on a happy Friday. It's good to see you as always, Sarah. Sean Fitzgerald, Serenity Trading, amigo, good morning. Nasdaq, Vince, my guy, DA, Dark Heaven, good to see you. Shaw Cunningham, whoops, Gremlins, yeah, I had a little bit of a gremlin this morning. I thought I had everything set up to work and unable. Charles March, good morning. GNR, Hegel Matters, good morning, Rick. Sometimes you win, sometimes you learn. I like that. That's a good one. Rick's got his own quote for the day. Sometimes you win, sometimes you learn. Why have I never noticed Led Zeppelin in the background? I like you more now. Led Zeppelin is, yes, my one of my, probably my all-time favorite as far as rock and roll bands are concerned. Rusty Golfer, my spirit animals here. Unicus with his quote for the day. The brilliance of the stars would be invisible without the vast darkness of space behind them. Do not wish away the difficult portions of life. They provide the contrast needed to appreciate the joyful moments. Great quotes, Unicus. Great quotes. John, Kevin, good morning. Dowitzer, Rob T, Stephen, Mike, Marcelo, and Caesar. Good morning to everyone. It really makes me happy and warm when you guys all say good morning and let me know you're there. And of course, feedback is important to us. If you have a suggestion to improve the forecast, make Hogue Money, group coaching, anything, recap that we do, please let me know. Send me an email to jhoagland@topstep.com. Okay. Nasdaq. Yep. Love some ZEP. Yeah. The thing right here, I know it's kind of hard to see, but it's an unused ticket to a Led Zeppelin concert in 1977 at the Chicago Stadium. Was one of the canceled concerts after, unfortunately, Robert Plant's son passed away. They canceled the last 6 concerts, and that was one of the unused tickets that I happened to come along. And it's kind of funny because the face value of that ticket in 1977 was $10. $10 to go see Led Zeppelin. I wonder what it would cost if they did reunite somehow and had a concert. It would certainly be a lot more than $10, right? But you shave half my mustache. Which half? The left half or the right half? Left half or the right half? Or the top half or the bottom half? Thanks, Joel. All right. All right. We're going to take a look at the charts here. Again, it's Friday. Again, my goal usually on Fridays is to try and stack up a little bit more cash for the end of the week and call it an early day. We used to say in the pit, anybody that was still in the pit at 2 o'clock on Friday was certainly down money. All right, let's jump in here. Let's start with crude today. We'll try something different. So here's the crude daily chart. Overall, of course, the market has been moving lower over time here. Just to kind of get a little further out, you put in this high. We've been largely putting in lower lows, and lower highs. That's changed recently. We're in short time frame downside structure, but overall, I think the market is central with balance forming. We had an increase in open interest of 3,200, which is a little bit, again, blurry because of expiration. The November contract lost 11,000, and that is counted in that total. So there was a pretty decent boost in open interest, but it wasn't. I'm fearing very directional. I think this was just a readjustment of inventory after rollover by some of our longer time frame traders. So the market seems to be, of course, shrinking for now. Here's those trend lines. As far as the overnight is concerned, we've got an opportunity here to open with a gap. Overnight inventory, if we started the overnight trade up here, we're starting to look a little bit short as far as overnight inventory is concerned. If we were going to be opening up here, I would have been probably a little bit more patient because we were opening out of balance from yesterday's range. It may entice me to a little bit of an earlier opportunity, perhaps an opening range trade, although those have been horrendous, especially in the equities lately. So I'm going to try and stay patient. I'm going to look for extremes in this this trend line certainly is providing 1 to 3 points of contact and may give us an opportunity to limit risk over alongside with the overnight low here. If we open outside of range and value and can't close the gap, then we look for opportunities to trade in the direction of the gap. Opening outside of the range and value also offers us the opportunity upon reacceptance inside of value to play the value area special situation play, which would take us by the end of the session for a potential rotation back to the high of value from yesterday. So as long as we can't close the gap, I think we're looking for opportunities to look for longs down towards our overnight low. If we lose this, if we get back into range and back into value and reaccept, and I understand reacceptance of value is a subjective term. We used to say we needed 2 30-minute bars to close back inside the previous day's value to indicate acceptance and kind of put the value area special situation play in play. We got to watch and see what happens. Unfortunately, with no recap today, we'll have to see how this plays out Monday morning. Take a look at the E-mini S&Ps of similar situation. When we're looking at this, volume and open interest sees short time frame control. We lost 2,300 in open interest. We're in the central location between weekly kickoff high and weekly kickoff low. Relatively central location between last week's high and low. We're kind of falling into short time frame control here. When we're looking at no economic data today, central location, short time frame control, short time frame levels are going to be a little bit more perhaps important for us today. Looking at the bigger situation, the longer time frame structure is to the downside. The medium time frame structure is balanced. Short time frame structure still looks to be pushing to the downside. Where did we start the week? We started the week down here. Do we have any real opportunity for any profit taking? No, not really. So here's the 30-minute chart. All right, overnight inventory mixed, perhaps. I mean, we opened here. We are down here. There may be some overnight shorts in this market, and we are opening with a gap. So again, gap rules come into play with the inability to close the gap relatively early. We're looking for the opportunity to sell strength, looking for continuation to the downside. Upon reacceptance inside yesterday's value area, which is the low of it is approximately 36.84, that puts in the, well, we used to call it the 80% play. I think it's more like the 65% play, where if we open outside of range, reaccept inside value from the previous day, there's a good probability that price will attempt to reach the other extreme of value at some point during that session today. Again, unfortunately, we won't be able to see that on any recap today, but keep an eye, even if you don't play it. If you find that the market or price is advertising back inside yesterday's value and finds acceptance, you may see the market return or at least attempt a move back towards the upper area, the upper range of value from yesterday. That would be a pretty big stretch. Anything, however, can happen. All right, BS Swede. Swede. Acceptance or explanation of acceptance is extremely subjective, right? So you'll see the market come back into value and reject. Now, how long, how much volume was exerted, I guess, back inside of value. We used to say, Besweed, we needed 2 30-minute bars to close back inside value to mark acceptance. But it doesn't mean the market's going to just all of a sudden lurch towards the other in the direction we're looking for it to go. The thing about the value area special situation play is it's an all-day expectation. So we can find acceptance inside value, leave value, fail to continue the move to the downside before coming back in value and seeing the value area special situation play out. So JD is saying it looks heavy to him, and it does. We're opening with a gap, and if we can't close the gap relatively early, we're looking for opportunities to sell strength for continuation to the downside. The value area special situation is a whole nother hypothesis or situation that could present itself if we don't open with a gap, or if we open with a gap and come back inside range and back inside value, find acceptance, then we see the continuation to the upside. It's always a tricky play. Rarely does it just come up and say, we're accepting, you better buy it, and then just continue to go. So what it does is it comes in, marks acceptance, gets you long, stops you out, comes back in, gets you long again, stops you out. About the time you give up on it, that's the time it starts to move in that direction. Either that, or acceptance occurs very quickly and the market comes into value and races to the other side of value, leaving you behind. It is a tricky play. So whenever it is in play, I like to watch it even if I don't participate, because there's always something to learn about what marks that acceptance. Okay, Bisweed, it's always subjective, never the same way twice, just like everything in futures. There, I mean, you can see similar patterns, but I don't think that the same thing happens exactly the same way twice. We're already seeing overnight inventory getting a little bit nervous here as we get closer to the open. So Haggle Matters value is in the red here. This red line here is the low of volume value from yesterday. It's back into range, which sometimes may negate some of the power of the value area special situation play. I prefer the special situation play when price opens outright outside of the range from the previous day. Well, here it goes. We're seeing some overnight inventory short covering right now. But prior to the open, straight to value low. It's almost as if something has just come out. So it depends on where your time frame. If you extend the time frame to the 5 o'clock close, it's already in value. My time frame for my value area and TPO charts is the 3 o'clock cash close. So you're getting more information after the cash close, which did move value to the low of the range. Okay? So if we were to look at the TPO charts, okay, the TPO chart value low is the low. Volume value, low is here. Is right where the market traded to. But TPO, value low is here. So we would really, truly have to open outside of the range from yesterday for TPO volume value special situation play to play out. Volume value would be up here. got some anomalies in the profile yesterday. Here's one. There's a little hole here. There's some holes here that look like they could use some repair. So we've got plenty of time for this market to open back outside of range to see if we can get that value area special situation play. Here's the Nasdaq. Nasdaq is, we were talking about the S&Ps in longer time frame, lower structure, medium time frame balance, short time frame, lower structure. Nasdaq is all lower. We've got longer time frame lower, we've got medium time frame lower, and we've got short time frame, all with lower structure. The Nasdaq added 3,800 in open interest yesterday, where the S&Ps lost 2,300 in open interest yesterday. Volume was pretty decent in the Nasdaq yesterday. This push to the downside has more teeth to it than what happened in the S&Ps yesterday, and we know that the Nasdaq has been presenting as the weakest of the equities. Here's the 30. All right, so overnight inventory. Where do we open? Opened here. Overnight inventory adjusted back to settlement, back to point of control. We've got our value area special situation. We're going to need to open outside of range for that to come into play. It is possible. And of course, gap rules has us going in the other direction. So in the equities, in the S&Ps, in the Nasdaq, the real question is, are we accepting yesterday's range and value, or are we rejecting yesterday's range and value? I think is really the most important question we can ask ourselves as we get into this trading day. Does it look like we're accepting range and value from yesterday? Does it look like we're rejecting range and value from yesterday? Nothing makes this easy. Nothing makes this easy. It's always a challenge, and we have to be able to hypothesize situations, trade to those situations as long as they ring true, and then have backup situations. So, I mean, two hypotheses today is open out of range and value, not close the gap, look lower, open in range and value, stay patient, open outside of range and value, reaccept inside of range and value, and see if we can't catch the value area special situation play. Now, there's three different hypotheses, three different scenarios, and three different strategies, and maybe none of them are going to work. When you put a trade on, all you can expect is for something to happen. And like my brother Rick said this morning, sometimes, what did he say? He said, sometimes you win, and sometimes you learn. Gold. There's gold in them Nar Hills. Well, we've got a little turnaround here this morning after the 720 open. We added 900 in open interest yesterday on an overlapping to lower range, but on lower volume. Seems to still be towing this line. We're getting a really good look at a test of that right now. Longer time frame, medium time frame, short time frame structure on the daily chart here is all lower. Longer time frame, medium time frame, and short time frame is all looking lower. 30-minute chart. So there we go. Now we've got our trend line intact here. So this trend line, which was resistant, it still remains resistant. Now there's a potential for a breakout to the upside. And what else? Well, we opened with a gap. The gap has been closed. We are now showing signs of acceptance inside value. We've got one 30-minute bar closing inside of it. We've got two TPOs inside of it. We have excess off the low here, and as far as the TPOs are concerned, as far as profile is concerned, we're seeing excess below price. To me, this looks like a relatively confident value area special situation play opportunity for us. Unfortunately, we just looked at it and we're a little bit late to the party. So I'm going to be seeing if I can't find some sort of volume shoulder to lean on some sort of low volume node inside value, as close to this value low as I can, to try and get into this trade. Because again, it's showing potential acceptance in the first 30-minute bar closing inside of value. It's showing a potential momentum to the upside as far as the value area special situation play. So buying pullbacks above this level, as long as this level does hold, and it's nice that it's so close to the low of yesterday's range as well, could bring us to a nice, tasty value area special situation play opportunity to the upside. There's no guarantees of anything, and they always make this opportunity seem very difficult. All right. Sorry about the spam coming in. I'm sure nobody's really... the 10-year rate and the dollar broke, so we got a little downtick in those, a little uptick in the S&Ps, a little uptick in gold. All right, let's take a look at the euro, the 10-year, and the natural gas, and we'll get out of here. The euro. What do you say about it? It's really range-bound. It's been very just kind of, I think, kind of tough to trade. It's shrinking. Central location between value, weekly kickoff high and low. Relatively central to these trend lines. Volume has largely been trending lower as we continue to stay range bound here. We did add 3,700 in open interest yesterday, and I think we've been overall adding open interest in this range bound activity, which should bring more energy when there's a change, when there's a breakout of this current balance that we're in. Here's the 30. So again, opening outside of range, opening outside of value. Make sure I've got my time set right here. Nope. There we go. So that's the 2 o'clock close. Opening outside of range, coming back into range, still holding below value. But it doesn't mean that the value area special situation play isn't in play. We opened outside of range. Our overnight high lines up very nicely with value low. This market is really largely in short time frame control, and you're going to have some short time frame control traders interested to see how the overnight high reacts, if indeed the market does get there. All right. Still toeing the line, tested to weekly kickoff low. It is in play. It is 109. Look how solid this downside structure is. Long time frame, medium time frame, short time frame. Everything is saying lower. Is there a possibility for some profit taking? I would say there is, because we are near this weekly kickoff low. If we can't accept down below it, if I were short, I would probably be lightening up a little bit if we can't continue below that weekly kickoff low. May have something to do with what's been going on since we've been in the forecast, with rates dropping a little bit and seeing a little bit of buoyancy below weekly kickoff low here in the 30-year. In the 10-year. Potential profit taking. We had overnight inventory to the short side. This could be just an overnight inventory adjustment, but again, I'm going to be watching for acceptance below or rejection below this weekly kickoff level here. Again, we opened with a gap. We close the gap. We seem to be rejecting the gap. But again, another value area special situation play looms above. And if we do get up there, I think that might be enough to incite some profit taking, because this market has been heading in one direction for so long. Steve, in the weekly kickoff lower levels that we put out on the weekly kickoff email on Sundays, they are levels that I calculate that I believe longer time frame traders will take notice and potentially adjust inventories in longer time frame, and longer time frame inventories are large inventories. So, as an example, this week's weekly kickoff high in the S&P is 37.78. Tuesday, we got within 3 ticks of it. The longer time frame inventory adjustment was liquidating longs or getting into new short positions. Sometimes they work real nice like this. Sometimes not so much. There's no guarantees, right? 10-year. Well, we were just looking at that. Here's the 30. Again, potential for rejection below and reacceptance above into yesterday's range. Natural gas continuing its push to the downside. This will be the last day for the November contract. By Monday, I'm fully expecting the December contract to have more volume, but the directional activity continues. Overnight open interest indicates an increase in bets at lower pricing. Continuation to the downside is likely, with open interest continuing to increase to the downside. Volume falling off just a little bit. Volume again trending lower. Is there a potential for a profit-taking event today? Yes, there is. I mean, look at the way the market's been. We opened this week here. We are currently trading at its low. That is a pretty substantial move, and if I were holding longer positions, I would probably think about trimming some for the end of the week, just before the weekend here. Take a look at the 30-minute chart to see what we see. Okay, there is a gap that remains from the past that we can continue to see a gap fill. There's lots of other visual targets down below for this market to continue to try and push down and get to those. Going back to the daily, I mean, we have our successful measured move off of the head and shoulders. Now we're in new territory, bringing in new business and maybe some new volume. And I think, overall for everybody, this is good news, especially coming into the winter months. We don't want to pay a lot for natural gas and energy coming into the colder months. I don't know how long this is going to last, but we have, at least for now, some really good continuation to the downside. All right. So we are gonna make a little bit of money this morning, and you're all gonna call it an early week. I'm telling you, I'm authorizing you to take half the day off today. Get out and do something nice for yourself. We work really hard at this. It's important to remember to reward yourself. There's so many different ways that this market can tear us down. It's one of the only jobs where you can actually lose money. But it is important to reward yourself for the hard work you are doing, regardless of your outcomes. Do something nice for yourself. Do something nice for somebody else this weekend. Be kind to yourself and others. Say a prayer for world peace. I'm going to take my deep breath and be ready for the equity open here. Get out there and profit. Trade well. I will see you in the proverbial trading pit in just a few minutes. And don't forget, 4 sessions of Make Hogue Money starts next week. Trade well, everyone.